Hello and welcome. You're tuned into Trading Hour. I'm Sonal Bhutra and with me is Vinny Motiwala. So it's a dark green on the screen after a really long time. The Nifty seeing gains of almost 300 points right now. We do have the mid caps which are around up around 1,000 odd points. And you know, it is coming in from most of the heavy weights, around 20% of the weights, which is HDFC Bank and Reliance Industries. Both of them are contributing to the gains that we are seeing today. And usually they've not seen the same direction in terms of the gains that we have seen. But today, HDFC Bank is up 2%. We have Reliance, which is sitting at gains of around 1%. So this is the reason why we are seeing so much contribution coming in from these heavyweights as well. Most of the sectoral indices, they are in the green today. But we have to talk about how the, the small cap index is moving today. It's a 2% gain that we are seeing there. The auto index has made a comeback. And IT, which has been volatile, but yes, it has been one of the outperformers. That index is up around 2% as well. So some green on the screen after a very volatile season that we've seen.
Absolutely volatile season. And, Sonal, when you're looking at it, it's 7 consecutive days of fall that we're seeing for the Nifty. Now, snapping that and finally seeing a green, I think, Sonal, you wear more of green so that we at least see a bit of green coming in on the screen. But yes, that's how we're looking at the market. At least a positive side that we're seeing coming in. A lot of mid-cap movers also. GMR Airports, that's in focus. We did have this domestic data that came in. We have Suzlon Energy, Federal Bank among the top gainers when you're looking at it in the Nifty mid-cap. And all the sectors today are trading in the green as of now. Some of these other Nifty performers, like Sonal mentioned, IT today is outperforming, right? So let's pull up something like an Infosys that's holding on to good gains in terms of contribution also for the Nifty. We have good contribution coming in from Infosys, TCS, and other than that, M&M. Auto stocks, they have started seeing a bit of a pick up as well today. So Nifty Auto is also something that we're keeping an eye out on. And two pharma names that I want to highlight today. We have Shilpa Medicare, that's in focus, as well as AstraZeneca Pharma, both in terms of news flows coming in for these two companies. So keeping an eye out on at that side as well. But a positive day that we're seeing coming in terms of the move in the market. But let's talk about a stock that specifically is in focus today. And we have M&M that we're keeping an eye on. It's the top Nifty gainers. So Darshan is joining in with us with details from the CLSA's note and what is keeping the stock abuzz. Sudarshan, good morning.
Good morning, Vinny. So CLSA has come out with a note after it hosted Rajesh Jejurikar at its India Forum 2024, and CLSA has maintained outperform rating on the stock with a target of rupees 3,440 per share, implying an upside of nearly 20% from current levels. So what are the positive catalysts? Company's focus now is on transition from entry-level SUVs to mid and premium models, and it believes that consumers are ready to pay extra 10% for features in passenger vehicles, and the prime example is the Thar SUV. The growth that Thar SUV has seen in the recent past. Now Thar SUV sales are around 6,000 units versus 700 units that company used to sell nearly a few months ago, and it believes there is a further upside potential in Thar SUV with 5-door version launch, and also consumers are ready to pay extra for ICE models. ICE models basically petrol and diesel models, as company believes they have lower GST rate in comparison to electric vehicle, and it's confident of new model driving growth in FY 25-26. Regarding the EV launch, it says it will launch multiple EVs in next 12 months and 2 EV models, XEV 9e and BE6e, to be unveiled next week. So on the back of multiple EV launches and continued SUV demand, CLSA believes there is an upside potential in the M&M stock price from here also.
Okay, all right. Thank you so much, Sudarshan, for telling us what's aiding the M&M stock today, the biggest gainer that we are seeing on the Nifty. But what's not doing well for 2 consecutive sessions is Honasa Consumer. 2 straight trading sessions of a lower circuit that we have been seeing. The numbers were weak, but Mangalam is joining in to tell us more on what's ailing the stock today.
Well, you know, after a 20% decline yesterday, today as well, the stock is low in double digits as well. And it's taken the entire week's cuts to about 25, 27 odd percent. And as a result of which, Honasa's decline from the top has been nearly 50%. So the stock is halved from its 52-week high. What's important is yesterday fell below its IPO issue price, and now it's fallen below the $1 billion mark in terms of market cap as well. And we know the second quarter earnings were weak. Now what remains to be seen from a technical standpoint is whether the exit door is fairly narrow. Because remember, if you look at the shareholding pattern of the company, you know, 35% is held by the promoters, but domestic institutions hold about 17.5%, foreign institutions hold about 19.5%, and PEs own about 21%. The company's widely held by institutions, and were some of these institutions, on the exit door itself, then it would cause further downside on the stock itself. Now, with the downside that we've seen from the highs itself, what needs to be seen is where is the value. Post the second quarter earnings, disappointing earnings, analysts cut their EPS estimates for FY25 and FY26 by about 50 and 30% respectively itself. And at current levels, at around 5.5 rupees FY26 EPS, the stock is trading at around 50 times. With a market cap of a little over 8,100 crores, they do have cash of about 714 crores. So at what level does the stock settle lower is something that we'll have to keep an eye out on after this big rout from the top.
Okay, thank you so much for that, Mangalam. Surely keeping an eye out on Hunasa consumers. But let's shift focus and also talk about Suzlon Energy. In the last 1 month, yes, surely it had seen a correction. But today, the stock is locked in upper circuit. We have some positive commentary that's coming from Morgan Stanley. So Darshan is here to tell us the details about this note.
So Suzlon continues to move higher. It's at the upper circuit for second straight day. And now today is the note from Morgan Stanley. It has upgraded the stock to overweight from equal weight, but has cut target to rupees 71 per share for rupees 78 per share. And it believes that after a sharp decline the stock has seen from 52-week high that it hit in September, there is a chance that basically it's advising to accumulate the stock at current levels. And what's the rationale as per Morgan Stanley? It believes business moat and growth opportunity for wind OEMs remains strong, and company is likely to be beneficiary of India's energy transition, and it has large 5.1 gigawatt order backlog executable in next 24 months. And market share it expects to improve in the range of 35 to 40% by FY27 versus 25% FY24. As far as estimates are concerned, it has lowered FY25 wind turbine generator EBITDA margin by 50 basis points to 8%, but has retained FY26 and FY27 margin assumptions. So after a sharp decline that stock has seen from 52-week high, Morgan Stanley believes that basically it can be accumulated at the current levels.
Okay, so that's what investors are doing today, 5% higher on the stock. Thank you so much, Sudarshan, for bringing us all those details. So those are some top gainers that we wanted to highlight. But for now, we'll slip into a short break. Up next, we'll discuss what's buzzing in the commodities space as always with Manisha Gupta. Stay tuned.
Welcome back. You're watching Trading Hour on CNBC-TV18. Let's shift focus to the commodity space and we'll talk about cacao. What is that pricing doing? Manisha is joining in with us to tell us more details on that. Manisha, good morning. And are my chocolates becoming expensive or cheaper? What am I expecting now?
Oh, they are getting expensive, especially ahead of Christmas and the holidays. I mean, this is the time that you see very strong demand continuing in case of cacao. And we have seen prices near a decade highs. It has been a one-way rally for cacao. I mean, of course, we've seen blips come in there as well. But majorly, the fundamentals are quite on the stronger side. So the two major producers of cacao, one is, of course, Ghana, where we are looking at civil unrest within, and there have been concerns about production there. The second is from Ivory Coast, where we are looking at unfavorable weather, so much so that you have seen production numbers decline, and the inventories, not just in Ivory Coast, but also US warehouse inventories in sense of cacao are the lowest since 2005. So everywhere that you see, whether it's about the production countries or the global inventories, are all on the weaker side there. The markets also are looking at some uncertainty as we look at the European deforestation regulations, which as of now have been pushed off by 1 year. But what shape and form would that come in from? And with the expectation that after Europe, you could be looking at US and Canada and Australia also come in with deforestation rules and regulations, is something that really seems to be bothering the cacao prices there. I want to bring that chart on your screens to tell you on what the prices really have done. So in last 1 week, we've seen almost 6% of gains come in, 13% of a jump up in last 1 month, and it's almost doubled in this year with 99% of gains in cacao prices in this year until now. So well, yes, your chocolates and your hot chocolates and all of those things are going to be expensive before this year ends.
Manisha, I don't know about the prices, but you both have spoken so much about chocolates and hot chocolate that I feel like having it now. It's on the two of you. When I come out of the studio, you are treating me with one of them. So, but thank you so much for bringing us up to speed to what's happening with cacao prices. A big surge is what we've seen in the prices this year itself. But we'll do one thing. We'll slip into a short break. When we return, we'll discuss market technicals with our technical guest up next, which is Mitesh Thakkar, and also discuss the top trading bets. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, the government is likely to discontinue the windfall gains tax, and sources have told CNBC-TV18 that the Prime Minister's office has asked the Petroleum and Revenue Departments to finalize the contours to issue the relevant notifications to discontinue the levy. Remember, it was first levied on 1st July 2022. It's been 2 years. Timsi Jaipuria is joining us with the details. Timsi, take us through the government's rationale.
Well, after almost over 2 years of existence, the windfall gains tax levy could soon come to an end. That's what sources are indicating to CNBC-TV18. What we are picking up is that the government at the top has decided to discontinue with this levy, and a decision, a formal decision, a formal notification for the discontinuation of windfall gains tax levy could come soon as by end of December or middle of December. Sources indicate that the Prime Minister's office has asked Petroleum Department and Revenue Department to finalize the contours to issue a relevant notification to discontinue this levy. Remember, this levy, that is the windfall gains tax, was levied from 1st of July 2022. And some of the reasons behind this discontinuation is that the average crude price was not yielding much taxes. The industry was unhappy with the levy, and the levy was having an impact on the production levels, and thus the country now wants to enhance its production levels of crude oil, because of which this discontinuation decision has been taken. Let's see how soon a formal notification is issued. Where are we actually in terms of the total collections? All of this are likely to coming in together with the announcement of discontinuation, which could be as soon as within December itself. Let's see. As and when it comes, we'll keep you updated. Back to you.
Okay, thank you so much for that, Timsi. But let's move on and also bring on board Mitesh Thakkar, who's joining in with us to give us a quick take in terms of the technicals and a quick check on the market as well. Mitesh, good morning. Thank you so much for joining in with us. Let's look at the market, right? Today, a pretty day coming in for the markets. But do you think this is something that we'll hold on to in terms of a move?
Yeah, good morning. So my sense is that yes, but it will be volatile. We've had a good bounce back to 270 to 80 points on the Nifty, 500 plus points on the Bank Nifty. But bounce backs typically tend to be choppy, so I think there could be some volatility. But I do expect that eventually this bounce back could head towards 23,850 to about 23,900 zone. So there's still about 120, 170 points left on the upside, and then we'll take it from there. So for the time being, we've been advising people to get out of short positions since day before yesterday, and today, morning we've started taking some long positions as well.
Long positions since morning. Any other individual names that you would like to highlight, Mitesh?
Coforge would be a recommendation as a buy call with a stop below 8,100 for targets of 8,400 plus levels. And the other one is a buy on Coromandel with a stop at 1,740 for targets of 1,820.
Mitesh, I wanted your thoughts on HDFC Bank and Reliance Industries. Reliance has seen a sharp fall from the highs of the day. HDFC Bank has been very volatile. Do you think there's an up move that's coming up for these two big names?
HDFC Bank, has been something which, it didn't even fall or it didn't even correct when the market was correcting. I mean, it did come down a bit, but there was no severe decline happening over there. So very, very positive on HDFC Bank. I think it should head towards 1760 first, but then eventual targets are 1790 to 1810 levels. And I do suspect that eventually I might revise them as well. So very positive over there. Reliance, on the other hand, is more of a bounce back from oversold levels, could head towards about 1300 toward 1305. If it starts sustaining about that, we'll look at a slightly bigger reversal.
Okay, sure. And Mitesh, just the word, you did mention about Coforge, but overall as an IT pack, and do you think Nifty IT, now we'll see a bit of a positive up move coming in for this one? In the last month to date move that I'm checking, Nifty IT has been that outperformer coming in, YTD also. So do you think that outperformance for Nifty IT is something that will continue?
Not sure of that. For the timing, yes, there are some of the IT names which look interesting to me, but whether it will outperform in the medium term, I'm still not very clear about.
Okay, all right, Mitesh, thank you so much for joining in. So those are some technical bets and levels to watch out for on different stocks and sectors. But time for some more highlights from the CNBC-TV18 Global Leadership Summit. Our colleague Sapna Das spoke to the DIPAM Secretary Tuhin Kanta Pandey on the government's divestment plans and a lot more. Listen in.
I think we are looking at it. We have, as I said, that we have, fit and proper. After fit and proper, we have moved to due diligence by the, by the bidders, which are in the fray. and we hope to receive a financial bids within this year. TNL is an issue where is an ongoing concern, and they will, their business, which is existing business, is being managed by, BSNL using the resources that.
It is going to be managed or is being managed?
I mean, in the sense that
transition has started.
They are writing an agreement, their operational agreement between them, so that. The BSNL management, which is there, which is also in charge. In fact, CMD is in charge of BSNL. MD is also in charge of MTNL as well. And so that is one part of it. The second part is that they have to have an asset monetization of some of their land and buildings which are there in Mumbai and in Delhi. And they have to really do through following the process of monetization. They have to keep doing it in order to raise resources.
Restructuring package?
And there is no package as such. This package was really considered in 22 by the cabinet, and to that extent we have also issued some guaranteed bonds. And obviously the guaranteed bonds, if they come for redemption, as and when their dates fall due.
But MTN is a defaulter at the moment.
But then
anything with the banks on the cards?
No, if there is a guarantee of the bank, if there is a sovereign guarantee, those guarantees are then honored.
Okay, on that note, we're going to slip into a very short break. But up next, we'll discuss the latest e-commerce trends with Sachin Dixit of JM Financial Institution Securities. So don't go anywhere. Welcome back to Trading Hour on CNBC-TV18. Let's focus and talk about the latest e-commerce trends, the latest internet trends, what is happening in that sector. We have Sachin Dixit, the internet lead research analyst from JM Financial Institution Securities, joining in with us. Sachin, very good morning. Thank you so much for joining in with us. I want to just start by talking about overall the e-commerce trends that we are seeing currently in the industry. What is it that we're watching out for? And are there any concerns that maybe, those big ticket items, maybe that over there, we could see a plateauing in terms of the penetration there?
So, well, obviously what we are seeing across the e-commerce trends that we are talking about, obviously quick commerce is one side that is coming up, where people are talking about the SKUs widening and the impact of that happening on someone like larger e-commerce incumbents. But what we are also seeing is that our offline participants are now becoming more and more proactive. They are willing to match up the discounts. They are willing to tie up with the credit card companies to offer some of the EMI programs and things similar to that. So that was, I think, what we are seeing in some of the larger ticket items, like let's say the white goods or mobiles. Some of that catching up is happening, which is why we are probably seeing that the mix of e-commerce in some of these categories is starting to plateau to some extent. What is getting compensated by is that basically long tail categories, like something in the home decor side, etc., is coming up, which is what is accounting for some of the rise in mix, or maybe something like an BPC, etc., is also rising on some of the e-commerce platforms.
Okay. The other factor that's taking place is the increase in platform fees, especially during festivals, is what we saw during Diwali, Zomato increasing it. What's the customer sensitivity to these changes that come by occasionally, or sometimes they are there for a longer period of time as well? Is there any math on this? Does it really impact the product basket or the frequency with which a customer orders on a platform?
Well, it's tough to say right now. Obviously, the platforms are taking a gradual approach in terms of inching up this platform fee. You would have seen what some of the food delivery companies announced pre-Diwali, that they were amping it up for the festive season. They did not commit to it being the long-term scenario. What is happening on the customer side is customer obviously is doing some sort of math at their end. But so far, we have seen minimal price elasticity being visible on that end. And the customers seem to be indifferent so far at the platform fees or the delivery fees that are currently being charged. What is also happening on the other side of this whole puzzle is the e-commerce platforms like, let's say, a Flipkart or Myntra. those were never charging you a platform fee until quick commerce era came up. Now we are seeing for some of these platforms, in order for them to inch up their own profitability or basically take care of the return rates that are quite high in something like apparel sort of a category, they are now also bringing those platform fees on their platforms. So which is where I think overall in the entire ecosystem, platform fees are on the rise. Customers are okay to a certain extent, but obviously we'll see at what point do the customers start to react to the rise in platform fees.
Okay, so far so good in terms of, customers accepting this platform fee that we're seeing coming in, Sachin. But, you did highlight about quick commerce and that being a big growth factor. We've seen companies also talk about the quick commerce side as well. So what is it at in terms of, obviously we have seen Swiggy get listed recently as well. We have Zomato in the food delivery side that is there. We have Blinkit on the quick commerce front for Zomato. What are you liking over here, Swiggy, Zomato? What are you looking at in this space?
So I think, and this has been a constant Zomato versus Swiggy debate, which I think played out on media as well as sell-side analyst reports. That's a consistent debate. Obviously, over the past few years, we have seen Zomato inch up some market share. Blinkit obviously has out-executed in terms of how the whole ecosystem has evolved. But there are things that have come up on Swiggy side as well. And the company is trying to ramp up some of their own play, whether it's in terms of execution or in terms of profitability. Right now, I think most of the investors are looking at where the valuation favors them. Obviously, none of the platforms is considered that, okay, they will completely lose the plot. So I think both will survive. The market is large enough for both to exist and also make money out of it. Now it's only just someone might a bias for Zomato, someone might like the valuations on Swiggy. So I think right now it's a tough call between the two of them.
I think that debate will continue for a while, Sachin, because those are the two hot takes that everyone's been talking about as well. Let's talk about take rates. We've spoken about the platform fees, but can they charge higher take rates as well? We always talk about how Zomato charges maybe a little more than what the restaurant prices are. Does that reflect the take rate difference? What are these companies focusing on? And does that also mean that these companies cannot just start with the older, new players cannot break into the existing category? They'll have to look at newer categories then.
So sure, I think on the food delivery side in particular, the take rates are pretty much mature. We do not believe take rates in itself will likely rise too much. What is rather happening is that how those take rates are coming up, right? For example, someone like a cloud kitchen, right? Someone who has zero offline presence or customer recall without the food delivery platforms will offer them higher take rates. What we have seen over the past couple of years, some of these cloud kitchens have grown much faster than the typical restaurants that we go to dine in at. So when these cloud kitchens rise in mix, the overall take rates do tend to go up for these platforms. Secondly, what we are also seeing that some of the restaurants, they were very reluctant to advertise on these food delivery platforms in the past. Now their sort of adoption to advertising on these platforms has also come up, which also gives rise to a higher take rate. I do not believe like-to-like take rates have too much room to go on the upside. There might be incremental shifts up or down, but I do not think they will change very significantly. The only change is likely to happen in terms of the restaurant mix or the advertising proportion that comes to them.
Okay, Sachin, and just a word in terms of overall, if one has to look at the India internet story or play the e-commerce side, what would you be looking at right now?
So, well, I think some of the companies are yet to come to public markets. There are plans that some of these companies are executing, whether in terms of trying to shift their domicile to India from where they were, whether it's Singapore or US. So that sort of play out is likely to happen. Right now, I think for public markets at least, India internet is still an undiscovered story. A lot of the discovery is yet to happen, whether in terms of business models or in terms of pricing or valuations. I think a lot of it is yet to play out. So I'll suggest most of the investor community to keep their eyes out in terms of what is coming to markets over the next few years, because I'm sure a lot of action is still out there.
Oh, there's never anything stopping the great India consumption story, right? So there's so much happening, and all these stocks, they have started to make a comeback as well. So thank you so much, Sachin, for joining in today with your take and what's happening in the new internet era when it comes to different new platform themes that we've been talking about. We'll do one thing, we'll slip into a short break. We'll get you more on the markets on the other side and stock-specific action as well. Okay, welcome back. The markets are picking up pace. Nifty is up more than 300 points right now. It's above the 23,700 mark comfortably for now, very close to the 23,800 mark. We have the IT names which have propelled Nifty higher further. Infosys, that is at the day's high. There's Wipro and TCS. These three IT names, they are the reason why we saw that sudden spurt coming in on the Nifty as well. And it's not just Nifty. Even if we look at the mid-cap index, when we started the show, it was up around 900 points. Now it's a more than 1,000 point gain that we are looking at the mid-cap index as well. And across the board, there's a big surge that's come by. Even some of these pharma names have made a comeback. The likes of Cipla, Sun Pharma, these two should be on your radar because there is definitely some buying that we are seeing from the lows of the day, and Nifty Pharma also is at the day's high. So some pickup, we'll have to see whether this sustains or not till the end of this trading session as well. But let's move on. India is going to be the consumption story for the world this decade, says HUL's MD Sanjeev Mehta in his interaction. This is, of course, the ex-MD that we're talking about with my colleague Shilpa Ranipeta from the sidelines of CNBC-TV18's Global Leadership Summit. Here is an excerpt.
I'm a big believer in the India story. I don't think we should get unduly worried with a short-term blip. There is nothing in the world which moves in a linear fashion. There is more stacked up in favor of India than ever before. And I can express at length why I believe India is going to be the consumption story of the world this decade and beyond, in a manner very similar to what China was in the previous 2 decades. What Viksit Bharat does, the biggest thing, is change the mindset of the people. It's brought in the belief that we can become a developed nation.
Okay, let's move on. The Central Board of Direct Tax Chairman Ravi Agarwal is confident that the tax collections will keep rising as the Indian economy grows. CNBC-TV18's Tim C. Jaipuria began by asking him about the present trends in the budget collections. Listen in.
So we are very, very positive about the present trends in the budget collection, and as reflected from the present trends, I am very hopeful and I am in fact very sure that we would not only achieve the budget targets, but we would take all steps to exceed it.
So when we talk about the collections, STT is the outlier. Every time we are seeing STT collections rising to almost double. Do you think that is a silver lining for the tax department to actually see how the recent changes that were made in securities tax collections, in the capital gains tax collections, is that something that is helping the department to come up with some new strategies, or is hopeful that these current rates will continue on these two planks?
You see, these are reflective. STT higher, it's about 89% now increase. But this is reflective of the overall economic scenario in the country. So this is a reflection of that. And of course, tax is the component. It's basically a derivative, I would say. Once the economic activity goes up, that is reflected in the, you see, earnings, corporate earnings, and then also the share market also reflects that. So it's all a reflective of the economic trends and the economic progress in the country. So naturally, if that's an offshoot, and if the economic progress is more, then corresponding taxes would also increase across the board, be it STT or corporate tax or a non-corporate tax also.
So when we talk of the upcoming budget, one announcement that everyone is looking forward to is the changes that the government is planning to simplify the Income Tax Act 1961. After two failed attempts that we have seen in the recent past, first the Arvind Modi Committee, then Akhilesh Ranjan Committee, they even submitted the report. How different it will be from these two attempts, and how hopeful are you that yes, this time finally this process will actually sail through and come in the budget?
You see, I would not say that these were, I think it will be too strong to say that these are failed attempts. It's basically an ongoing process, which is a consultative process, and the recommendations there in those were duly incorporated subsequently in the Tax Act also. So it's basically when the right time comes, then you see the changes are done, and I think I'm sure that this time the right time is there, and we should be able to come up with a simplified version. We are working for it. We are working on it, and we are working very hard on this. We are hopeful, and that we would be able to come up to the expectations of the government and to the taxpayers. And that's why we have actually invited suggestions from the taxpayers. This is all an inclusive approach, and we got good suggestions. We would be definitely taking care of those suggestions and duly incorporating it in appropriately in the statute.
Will this also give an opportunity for the department to bring in rate changes, or it will only focus on the simplification of the law, the language, reducing the burden of litigation? Is that the agenda, or there could be some rate changes too as part of this simplification exercise?
So I think I would just say that we are focusing on the simplification of the tax and making compliance easier for the taxpayers. So we are identifying those areas and we are trying to make it simple. So simple language, simple processes, that is what we are looking at.
Rates are not part of this agenda?
That is well, we will see it when the appropriate time comes.
Okay, with that, we'll slip into a short break. When we come back, we'll get you more on the markets and talk about some stocks. Stay tuned.
Welcome back to Trading Hour on CNBC-TV18. Let's shift focus and talk about NTPC Green's 10,000 crore rupees IPO that is open for subscription today and closes on 22nd of November. Vamakshi is joining with us with more details on that. Vamakshi?
Well, Vinny, NTPC Green Energy is a wholly owned subsidiary of NTPC. It is the largest renewable energy public sector enterprise in terms of operating capacity as well as in terms of power generation, and its portfolio includes both solar as well as wind power assets. Let's look at the kind of capacity that the company has. They've installed nearly 3.3 gigawatts, 5.9 gigawatts is under construction, and they have 10.8 gigawatts in the pipeline. So overall, they currently have a portfolio of 20 gigawatts. Now in FY26, they are planning to add capacity of nearly 11 gigawatts. By FY27, they plan to commission nearly 20 gigawatts, and in FY32, they plan to commission nearly 40 gigawatts. So by 2032, largely they will have nearly 60 gigawatts of renewable capacity. In fact, in addition to that, in the next 6 to 9 years, 14 gigawatt of pumped hydro capacity will also be commissioned. Now, let me quickly take you through all of the IPO details. The IPO opens today, that is November 19th. It will close on November 22nd. The price range is between 102 to 108 rupees per share, with the total issue size of 10,000 crores, which is entirely a fresh issue. In addition to that, they've also raised 3,900, out of the 10,000 crores, they've managed to raise 3,960 crores from anchor investors, and this includes notable foreign institutions like GIC, Abu Dhabi Investment Authority, among several others. It also includes some domestic institution names as well, which includes LIC, among several other mutual fund houses. Largely, nearly 7,500 crores from this fresh issue will be used to pay the debt of NTPC Renewable Energy. And lastly, let me leave you with the valuations. At the upper band, the post-issue market cap would stand at 91,000 crores, and analysts estimate that at this market cap, the company is valued at nearly 16 times FY27 and 13 times FY28 EV to EBITDA.
Okay, thanks for that, Vamakshi. But let's listen into what the management of the company had to tell us earlier on in terms of the targets and the plans that they have for the use of the IPO proceeds.
We have already chalked out programs to go up to 60 gigawatt by 2032, and this is what we had declared almost about 2.5 years back. Today, when the storage prices are coming down, we believe that we will be able to achieve that before 2032 rather than waiting up to 2032.
The proceeds of this 10,000 would be essentially for filling our capital expenditure. It's almost 19 gigawatt in the next 3.5 years. But however, intermittently we may use the proceeds also to, retire some of the costly loans temporarily. But broadly speaking, it is meant for a capital expenditure. The present debt equity is 1.91. But however, we will be implementing all this with a debt equity ratio of 80-20.
To meet the peak requirement and to have the grid stability during the day when there is excess solar. So it's a both, there is a combination of that. So there will be huge capex requirement for the storage solutions. We are working on that also. And going forward, there will be another important segment, which is the fourth segment, which is called the green molecule. Going forward, there will be storage solution as well as the green molecule solution, which will be FY27. We will be having 19 gigawatt commissioned, but that does not mean only 19 gigawatt. There is a work which is going on continuously. And what we intend is that what we had said about the 60 gigawatt by 2032, we should be in a position to commission that before that.
Okay, and with that, it's a wrap on this edition of Trading Hour, leaving the Nifty at the day's highest point with two stocks in the Nifty, HDFC Life and SBI Life, a bit under pressure, but surely mid-cap, Nifty, all trading near the day's highest point. With that, it's a wrap, and goodbye from myself as well as the team who put this show together. Don't go anywhere. Halftime report up next.